We have the perfect stablecoin use cases, getting access to currencies that we couldn't get access to before, streamline flows in a fast and more efficient way. It's amazing yield. Every bank and every fintech company look at this and say, okay, this is an opportunity either to rebuild my own infrastructure on top of that or to start a spin-off of my company and make sure that I'm not missing it out.
With a background in mathematics, venture capital, and a deep curiosity about both AI and crypto, Eytan has spent years studying and building at the intersection of financial technology and digital assets. In this episode, we discuss how stablecoins are unlocking USD access, cross-border transactions, and new financial models in regions like Africa and Latin America. We also dive into how Nilos is tackling liquidity challenges, banking relationships, and compliance automation, and how Eytan's founder-led content strategy is driving inbound leads and industry-wide adoption. Season 3 of Stableminded is powered by Defense, the leading multi-chain wallet platform helping fintechs, banks, and enterprises manage digital assets securely. More than 130 global clients secure over $1 billion in monthly volumes through Defense. Manage governance and compliance, automate workflows for approvals, and unify your APIs, all within a platform that has a perfect security record. Access a broad network of ecosystem integrations. From compliance tools like Chainalysis to exchanges like Coinbase, Defense integrates seamlessly with all the tools you need. This season, we sit down with the co-founders of Defense to dive deeper. All right, Eytan, good morning. Good afternoon. How we doing?
All good. How about you?
I'm just thankful that we are finally recording. For those who are just listening, we've spent 20 minutes troubleshooting this podcast, so we're finally in. We're live. Thank you for the patience. Why don't we start quickly with your full intro, your name, the background about what you're building, and then we can dive in.
Yeah, sure. Thanks a lot for inviting me, and happy to be on the show. So yeah, I'm Eytan Messika, originally French, guessed it by the accent already. 30 years old, living in Tel Aviv, Israel. I have a background in mathematics, so I've been studying mathematics in college, and then started my work career in investment funds. So I started as a venture capital analyst in a few funds. Then so started developing my interest around crypto back in the days, 2016-17. Started investing in cryptocurrencies at the time of the bull run of 2017. Bought my first Bitcoin. That's how I started. And then also was interested in AI at the time. So I picked one of the two fields at the end, eventually got into crypto. And then I worked in consulting, and in consulting during the COVID times, I had a lot of time to myself. So started to dig deeper into the Bitcoin thesis again, and I really went fully into Bitcoin and investing in Bitcoin on my own. Like for the fun story, I kind of told my banker that I would actually buy a car. So I took out a loan to invest in Bitcoin. Then when she saw when she saw the movement from the banking side to Binance, she told me like, what's this car called? Like, it's called Binance. So it was like in the crash of 2020 during the COVID times. So that's where I started really investing a lot of my time, and started creating content around it. So I grew a newsletter on technological aspects and crypto, especially back in 2020. So it was a newsletter called Overload. I grew to 1,000 subscribers in 6 months. And then, I used the money to move to Tel Aviv, to Israel, and I reconnected with a friend of mine that is the co-founder of the company today. And that's how we started Nilos. So it's about the background before the company.
That's awesome. So you've been producing, you've been involved with this industry for many years. You've been producing content on some of the technical aspects of it, which it sounds like has pretty quickly gotten following and support. What exactly was that newsletter? Are you still maintaining and operating that newsletter today, or what's the story the newsletter's about?
Yeah, no, I'm not. It's just like I was reading about like 80 to 100 newsletters a week, just out of interest. Kind of built my own feed out of Twitter and Substack at the time, just out of curiosity. So I was really building my own content curation. I was a big believer of curation at the time where we were overloaded by content. That's why I called the newsletter Overload. And what I was doing is just kind of creating those 100 newsletters and creating one piece of layer that would highlight, let's say, the biggest thing I've learned on this week. So it was a project that I liked because it was forcing me to kind of stay updated with the industry and things I loved. And two, it was helping other people to get information that I found useful. And so I'm not maintaining the newsletter, but I used to kind of take at least 6-7 hours on Sundays to publish it. And that's how I discovered like some of the biggest trends in the space. I went into DeFi in 2021 because of the newsletter. Yeah, that's basically how I got there. And my biggest belief is still like that's also one of my biggest content strategies, to still do a lot of curation. So if you see kind of the type of post that I do around stablecoins, and especially for Nilos, it's a lot about filling the gaps in building directories and trying to make sure that people can find good relevant information in one place so that they can remember, okay, I know I won't have the time to go through it today, but I know that I have this place where I can look up for those information when I need them. So that's like the biggest, let's say, directive that I have when I create content.
Yeah, I want to double click into that because you seem to be doing that really well. Just this idea of curation, providing resources to the right people. And for those who haven't maybe come across the stablecoin directory that you've produced lately, could you speak a little bit about that and why you've done that and what seems like incredible outcome of doing that in just a couple weeks? It's been awesome that come to life.
Yeah, thanks. Yeah, so it's been like 3 years that we built the company, right? So we started with a product around stablecoins, trying to make sure that we would create like a good infrastructure for businesses, especially in Europe, trying to build good on and off ramps, and then we expand into more broader use cases. But for the past 2 years, let's say, everyone had trouble to find like the perfect use cases for stablecoins. So everyone was talking about it, everyone knew it was interesting, but no one really understood why it was that much interesting. So people would explain that in theoretical terms. And what I found out is that people get inspired when they see real life applications. So I wanted to make sure that everyone in the industry would have like an example in mind that they could find that could help them get up to speed on trying to find a first POC to do, because it's very hard to understand practically what you can do with stablecoin. So I decided to just compile, even for Nilos, like what would be the good use cases to focus on, the good corridors to focus on, currencies. For Nilos, we found out that basically those use cases were around emerging markets and trying to make sure that we had one good API for currencies that were in high shortage of USD, very difficult countries with capital controls. That's where we find our sweet spots in terms of value proposition. But when I got deeper into the use cases, I find also like yield optimization in a lot of different currencies. We found that hedging for freelancers in specific countries like Argentina or Nigeria. So it kind of helped me to broaden our view on what we could offer around stablecoins. And I wanted to help basically anyone to get started as quick as possible on one of those use cases, especially the one that we're thinking about it. And we got a lot of interest out of that. I think the next 3 to 4 months were kind of insane between the Donald Trump re-election and the Pocket acquisition. I think it's sped up everything for the market. So I think it was a good time to publish that. It's been like 6 months that I'm being this director anyway.
Yeah. I want to talk about the future of Nilos and how you think about it and where you're going with it. But I want to start with where you've been. And you sort of touched on a couple of those areas of history in the last couple of years of building the business and the different approaches you've taken. But I think those couple of years, those formative years of like trudging through, figuring out what makes sense and how to resonate with customers and where to build and how it's going to work, so key for you now and as you in the business moving forward. What were some of the key learnings that you had within the last couple of years as you were building? You mentioned a couple of things like the capital controls and the types of countries you targeted. Can you just speak a little bit more to what those key learnings were in recent years?
Yeah, do you mean like key learnings in terms of the strategy itself around like the stablecoin product, or do you mean like key learning of building a business in a financial crisis?
I guess maybe specifically, it would be interesting to know that when you think about the business and the ways that you see it moving forward, the vision you have for it, were there key moments where you realized like, oh, wow, this is a shift in how I think about the business, or this problem that we've come across is really felt, or any of those types of things?
Yeah, sure. Yeah, so in order to understand that, let's take like maybe a step back and understand where we come from. So when we started the company, we were building in a phase where the Web3 space were kind of booming, and everyone was talking about like new applications of the decentralized space. So NFTs, DeFi was a high kind of hot topic at the time. And so we built our thesis on Nilos around the idea that the Web3 space would grow and that all those applications would have native on-chain revenues. So they would need a strong financial suite and solution infrastructure to be able to handle a world where you would have a lot of mixed currencies, including cryptocurrencies as payments and revenues, both. So let's build like a solution where you would normalize the crypto as a natural currency. The idea was to kind of make it invisible as much as possible. And let's treat cryptocurrencies and especially stablecoins, because those were the currencies you mostly used when we're talking about payments, as a traditional currency. So we built that, and then obviously the market kind of crashed completely, and it was like the delusion phase. And so you start as founders, we start to ask questions around like what's next, like where should we put our attention on. So we saw early on that our first initial cohort of customers wouldn't specifically survive out of this fear. We had a lot of Web3 application, like some of the biggest Web3 agencies, Web3 products. Talking to them, we kind of realized like there was one pivotal moment in the product where I thought to myself, I need to expand my view on exactly why do people use crypto in the first place. I think it's everyone kind of knows exactly why people use crypto, but we are so much constrained in our own like country and on like culture that you actually have no idea why it's very useful. So I just did like one simple exercise. I took like the list of the people that were using stablecoin and Bitcoin, and I just realized that it was 9 countries out of 10 was emerging countries. Nigeria, Venezuela, Argentina. And I just asked why. I was not sure. A feeling that it was because those people were unbanked and had a situation that was more difficult than on stable countries. But I wasn't sure, so I just booked a flight and went to Argentina, went to Buenos Aires for 3 weeks, and just started to speak to as much fintechs as I could, as much people as I could. And what I found out there is that stablecoins and cryptocurrencies is useful on the edge. It's almost only useful on the edges. So if you think about Europe, the US, those are pretty stable economy, and cryptocurrencies, they were mostly used for trading in those countries and investment perspectives, but it was not mostly used for payments. But in Argentina, when I went there, like people would use stablecoins to make sure that their salary doesn't drop out in terms of inflation out of 90%. It was used to pay for hotels in Brazil because Visa was charging like 15% on credit card purchases. So I've seen like really good use cases, and especially crypto exchanges doing remittance flows, allowing any Argentinian to pay in dollars with off-market rates. And I was blown away because in Europe, especially in the countries that we were addressing at the beginning with Nilos, we didn't have those issues. Like it was pretty stable. So we went from crypto as a new way of making revenue, and we need like to build this infrastructure for those companies, to let's take the actual problems and why people are using crypto in the first place, and let's try to build a solution around that. When I came back, we spoke with Rafael, my co-founder, and we said, okay, if crypto is useful on the edges, we need to expand our view on how we think about the platform. And so that's how we expanded to cross-border payments globally, and especially focusing on emerging countries. And it was in March 2024. So it was like almost a year ago now. And that's how we shifted completely the product. What's cool is that we already had built most of the infrastructure, most of the compliance framework, most of the knowledge and experience out of building with customers, having tons of flows going through the app. That allowed us to iterate and have the basis to then scale around more countries, more corridors, and more or less the same value proposition.
Yeah. So it sounds like now you went to Argentina, you saw the pain points that the 9 out of 10, you saw that what those 9 out of 10 people were using this technology for: dollar access, inclusive like avoiding high costs for payments, remittances. What other things do you find are either then or now that you see that this stablecoins on the edges is really used for right now? And then we could dive into Nilos and specifically what it looks like today. But what are those use cases?
Yeah, I think the biggest one is dollar access. You mentioned it. Like today, getting access to USD is very hard. I think the bridge use case kind of showcased that. And you've seen tons of startups popping up trying to bridge this USD access back by stablecoin. So this is like probably one of the biggest trends we see. On our side at Nilos, we see a lot of remittance companies kind of trying to optimize their flows, unlocking new corridors without having to pre-fund anything. So the cost of money becomes cheaper just because you don't have to hold any soft currency. So back in the days, if you had to offer a new corridor or a new payment method, you would have to get a new banking relationship, deposit funds there, hold multiple currencies in your ledgers. And now with stablecoins, what we see is basically you have a new trend of kind of testing new offers very quickly on the payment side, just because you don't have to pre-fund anything. You can just move funds instantly. So you go from a place where money is very static and you have to, the big players can actually hold most of the relationships and be very competitive. So you don't have a lot of space for new players to come in, to a place where actually when you can move funds instantly, you kind of lower the entry barriers to get into the market. So you have smaller players that can become competitive. So if you see about like the Nala of the world, like in the remittance space, I mean, Nala, Sling, even Felix, in those spaces, you see it's new players that become very competitive pricing wise, where you think about it in payments, you need to have a lot of volumes and a good relationship to be competitive pricing wise. So that's like a paradigm shift that I think brings a lot of value in the space, because it brings like competitiveness to those people. Think about like Western Union, all those big players that were eating the cake. Now they are getting like challenged a lot by those new players. So that's something we see a lot. And I would say like the third aspect that I think will become much more important part of the product around and offering around stablecoin is the yield part. So yield around having what Nubank did basically with Circle, I think it's a no-brainer for the space. So having the ability to kind of make money while you sleep, just investing your stables at a very good yield, a better one that the bank would offer. I think that's something that is going to be embedded in any financial application, even natively. So every company will effectively become a fintech company. Like will run like a bank. I really believe that. I think there was an article of a partner of Andrew Horowitz in 2018 that was saying like every company will be a fintech company, and now I think every company will be a stablecoin based company. I really believe that, just because it makes so much more sense and it's so effective product wise. What you can offer to your users when you run your company with a stablecoin based infrastructure. Like think about it, like every product company becomes a bank now, and now if you think about how a bank is run, stablecoin, you can leverage with stablecoin much more of your assets, can make much more money with the floating timeline where you hold funds. Like you can streamline so much more things, so that makes sense actually.
Yeah. For those who are not familiar with the Nubank and Circle relationship there, can you just outline what they've done and maybe make that a little bit more concrete for someone who's not familiar?
Yeah, so Nubank, probably for those who listen, it's the primary digital bank in LATAM. I think they run about like 110 million users, probably 50% of the Brazilian population already. And those banks, they also struggle with USD access. That's a fact for everyone in LATAM. So they partnered with Circle on multiple levels, but the first kind of partnership they did is the ability for their users to invest basically their money in stablecoins, specifically USDC, and get a return out of that. I think it was 4%, if I'm not mistaken. So you can top up in Brazilian real or Mexican pesos using your new bank account and get 4% out of USDC investments, which for an individual in Brazil is insane. Like you cannot have access to a savings account in USD in Brazil. It's very hard. It's not even legal in some regions. So that was like the partnership, but it's gonna extend to much more. I think like Circle is gonna become the backbone for those fintechs to have access to USD rails, just like bridged it with like dollar app. And I think that's the direction we're going in. If you spoke with a lot of different fintechs in LATAM, all of them, they are looking at the US market through the eyes of stablecoins now, rather than building banking relationships in USD.
Do you see that that's the common evolution of how these companies or how these users are wanting to adopt those three areas, for example, that you mentioned? Like you have dollar access first, just getting access to this or avoiding unfair practices on traditional banking. That then opens up really unique opportunities when it comes to things like yield. And then new business models can be created if those two things are in place, where all these users have on-chain accounts. They can set in funds. They can be natively on blockchain. then things like remittance, these other business models can be built. Do you see that as sort of the playbook, like the start to finish playbook of how that happens?
Good question. I think you start with the biggest issue, right? So adoption comes from the biggest pain point. And in those countries, the biggest pain point is USD access. So you start experimenting with USD access, and at least for the people in LATAM. And then you kind of realize, okay, this is super easy to use and this is super useful. So from a company perspective, I then kind of, okay, how can I leverage this new offering? So I have a lot of users that have access to stables now, and I provide them with accounts in stables that effectively they use as dollars. But on my side, I actually leverage stablecoins. From the first step is the user kind of solving one huge issue, having access to those USD-backed accounts. And then it's the company saying, how can I leverage those USD-backed accounts for more opportunities? And so the yield comes after that, I guess. And that's how I see it.
Yep.
And then once those two combines, you have a lot of inspiration for other companies to say, okay, what can we do next? Like we have the perfect stablecoin use cases. It's useful for getting access to currencies that we couldn't get access to before. It's very easy to streamline flows in a fast and more efficient way. And then it's better for optimizing yield. So effectively, every bank and every fintech company look at this and say, okay, this is an opportunity either to rebuild my own infrastructure on top of that, or to start like a spin-off of my actual company and make sure that I'm not missing out on any opportunity. So that's what we currently see. I mean, I've got contacted by so much big fintech companies that after the stablecoin directory said, like, look, we didn't know where to start. Like, it was a good example of how we could at least have an idea of what type of use cases we could start with. And it's basically following like the three steps that you mentioned. Liquidity is the king of the game in payments. So stablecoin kind of solves this issue completely. You can run your liquidity internally with your treasury team in a way. I like to say it like this, but in a way, like in a modern internet kind of way. I like to say that basically we were thinking of payments just like we're shipping cargoes. So like it's sequential. You do it in batch because you want to optimize fees. And now everyone is thinking about payments in the email way, like in the internal way, where you do it in a streamlined way. Like you said, an email. It's payments. If it was instant and fast, instant and cheap, how would you would consume payments in the same way you would consume emails? So it's just like you run back and forth. You send like multiple small payments. You don't care about the fees. It's virtually cost you nothing. So yeah, definitely, I think like that's how it's gonna be played out, and that's what we see. We just needed like a good kickoff from the market. Yeah.
Let's dive a bit more into this liquidity conversation, because you guys, when you're living on the edges here, as we were talking about, I think that specifically becomes very challenging, or like maybe the challenge. How do you solve the liquidity problem when you're working in all of these more difficult regions or emerging regions that have that liquidity issue? So two-part question. What is that problem typically? Like, what just help simplify why that's an issue? And then how does Nilos come in? How have you solved for that? I'm more into your offerings.
Yeah. So in order to understand what's the issue, you need to understand how people operate payments in emerging markets in a broader sense. So let's take a traditional fintech or banks. Like if I want to send funds from the US to Nigeria or Europe to Nigeria today, I would have to run multiple accounts in USD and Naira in Nigeria. So I would have to pre-fund my correspondent banking partner in Naira to be able to operate payments when someone wants to send USD to Naira. Just because effectively in the system, money doesn't move. So what happens is that when you trigger a payment from USD to Naira, your pre-funded account through your correspondent bank that holds Naira for you release some of the Naira to the recipient, and you need to rebalance your USD to this Naira account from time to time to make sure that you have enough liquidity to basically pass the payments that you need for your clients. So effectively, when you have that, you need to make sure that you have enough what we call liquidity in those accounts every time. And that creates like a huge challenge because you need to make sure that you hold those currencies that are very volatile. So you need to price that to your clients because it costs a lot of money to hold that currencies pricing wise because the money fluctuates a lot, like the price of the money fluctuates a lot. Also, like you immobilize the funds, so you cannot use it for something else. You cannot invest it. You cannot leverage it in another way. And also you need to anticipate a lot based on your current needs. So it's pretty much inflexible and it's very hard to manage that across multiple corridors. So I gave you one example of just imagine you have 100 plus currencies to handle. So it becomes very challenging to have a lot of corridors to maintain, just because you cannot hold those currencies and price them according to liquidity. And then imagine that you have
a remittance
a lot
company,
of
like dozens of these, you think? Hundreds? Like how many would a remittance company like these pre-funded accounts have to manage typically?
Yeah, probably like 15, 20 of them, depending on the corridors. Usually a remittance company, they have focus on specific corridors because they cannot compete on everything. But when they want to expand, that one becomes difficult. Like if I want to expand, usually I want to be able to test out a new market. So what's hard is that in order to understand if you can test out a new market, here you need to create a banking relationship, hold liquidity there, and then test out if it works. And if it doesn't work, you spend 6 months building the relationship with the bank. It costs you a lot of money. You market it to your users. So it's very hard to build out a new offering using that strategy.
And the banks are separate. Like the correspondent banks are all different typically.
Yeah, absolutely. And also, like, you cannot maintain that much corresponding bank relationships. Like, you can have 2 or 3. You cannot put them in competition too much. It becomes very hard because you need to maintain a certain level of liquidity there. Because the bank, obviously, they won't offer you a Naira account if you say to them, like, I won't fund that account at all. So that you need to maintain like at least 1 million worth of USD there. And so if you're small, and again, we're talking about inclusive offering, I think stablecoin allows you to have new incumbents coming to the space very, very quickly, just because you don't have to maintain those liquidity thresholds in the banks, because effectively you don't use corresponding banks. That's like the issue of how payments are made today, and how stablecoin is kind of solving it. It's just you don't have to hold any liquidity in those currencies just because you actually make the money move. So at Nilos, the way we do it is that you can top up your USD, Euro, GBP account directly as a remittance company, for instance, and trigger a payout in Nigeria. And effectively, we would move the USD, Euro, GBP directly in Naira to the recipient account without you having to maintain or hold your relationship with a Nigerian bank. And we would do it through stablecoin. So that's the traditional stablecoin sandwich model, but we would convert Euro to stables and then stables to Naira using our liquidity partners on the ground. We try to build basically relationships on the ground directly, so banking relationships and liquidity provider relationships, to make sure that we don't use any aggregators or any other payment company on top of that, just because pricing-wise, you need to be extremely competitive. So you need to go to the last layer of infrastructure to make sure you own almost the rail there. And so that's how you solve the issue. Like your clients doesn't have to hold those currencies. And then there are that's one aspect of the liquidity challenge. Like there is another aspect of the liquidity challenge, which is when you don't have liquidity in stablecoins in one country, how do you operate? How do you do when it's like payments of $1 million top, like for big B2B payments? How do you handle that? Because you don't want to make the market move. So that's like sequential challenges that are different challenges around liquidity. But I think the biggest one is the one I mentioned.
Yeah. Tell me how you solve for that. The liquidity partnerships, the direct partnerships that you're building, that seems like an incredibly important thing to get right. And it sounds like a very hard problem and something that I've heard many others try to solve. What is how do you find that problem? How are you solving that? Simply said, how are you solving that? And why? I've always wondered, like, what is in it for the liquidity partner on the back end? How are they making money, given the fact that they're sort of just, in my mind, being used here a little bit, like as a rail? Like, what's the pitch to them?
Yeah. So again, liquidity partner, their job is to provide you with liquidity in one currency against the other. So they win because we bring them business and volume. So that's like pretty much said that it's their job to be able to give us Naira or give us stables against dependent currency. And as long as you can bring volume to them, they are kind of happy with that. So are
those partners, maybe I know I'm learning as we're talking on this specifically, are those liquidity partners different, or typically like they're needed anyway in addition to those correspondent banks? So you're just cutting out the banking side, but those liquidity partners are still needed?
Yeah, you have a parallel in the traditional fiat economy. So in traditional banking or fiat rails, you have the banks, and then you have FX providers like foreign exchange providers that are specialized in moving between currencies. So it's exactly the same in the stablecoin space. You have banks and that are providing usually accounts to hold funds and then local payment capacities. And for most of the banks, also saving accounts, investing options. Like this is the job of a bank, but the job of a bank is not optimized around FX. if you know the actual cost that you're paying when you're moving funds through Swift, for instance, the bank is not routed to optimize FX costs for the customers, just because it's not primarily why the users use the bank. So you have a new layer of offering that is focused on optimizing FX. And so you would have two banks, and you were using a liquidity provider between those two banks that allows you to swap currencies at a much cheaper rate. That's basically how they operate. So that's exactly the same in stables. Instead of having between two fiat currencies, you have between one fiat currency and one stable coin. So that's usually how those liquidity providers operate. And then on the first part of your question around like so you told me what's in it for them, and then what was the first part? Sorry, I forgot like the actual first part of the question that you asked.
Me too.
Thank you.
That's what asking those multifaceted questions. Like, how do they make money? I guess I'm curious.
Yeah,
like,
so
how do they?
everyone is making money out of spread on top of rates. So basically, what's interesting in those emerging countries is that you don't have, since you have an incredible difference between people that want dollars and money in, basically in those countries, like hard currencies in, so Euro, GBP, USD in, and people that want money out to pay basically for imports and those kind of things. There is an arbitrage opportunity of getting money in. So when you have hard currencies like USD, you have a lot of leverage getting money in. And so the stablecoin price has an arbitrage over the USD price and the euro price. So you get a lot of money getting stablecoins in, and because a lot of people need that stablecoin to make money, to make payments out. That's basically how it works. And so those people, they put themselves in the middle and say, okay, I'm going to collect stablecoins by Naira, for instance, and I'm going to charge basically a spread on top of the actual rates of the off-market rate, because there is no, in Nigeria, for instance, you don't have an order book. So every liquidity provider is providing an off-market rate that can vary a lot. So it really depends on the day. Naira is like a shitcoin, to be honest. It's moving a lot.
Do you see that the liquidity partners that are you're working with in this part of the flow? I'm imagining that there are many companies that are pretty old and outdated and traditional in this part of the business world. Are you seeing that there are new entrants coming into the space who are stablecoin native or very like innovative with this stuff? Or are you seeing more of just like these traditional businesses having to get them convinced to adopt it? Or both, maybe?
Only new businesses. Out of all the liquidity partners that we have, it can be directly, sometimes it can be directly merchants that wants to sell, like directly get access to USD and hard currencies, and you sell them directly the local currencies that you have. But most of the time, it's going to be liquidity providers that are licensed, that operates directly on the ground, and those are like really, really innovative companies. It's not traditional companies or old companies that get like a stablecoin business unit, and that just shows like the mindset of those businesses. It's very hard to get on the ground, even if in countries like Nigeria and in Africa in general. We're live in 15 countries in Africa. A lot of those new businesses kind of starting to think about stablecoin, but only new ones are providing liquidity for now. Think about like a Yellow Card and those kind of companies. They're relatively new on the stablecoin side. You need to have like a startup mentality and to be able to get into the space and become competitive.
Yeah. Question for you, just, taking a step back and looking at the business holistically, when you're thinking about this end-to-end flow and where you think most of your time, the sponsor of this season, the supporter of this season is defense on the wallet and security side of things. Like, when you think about that sort of infrastructure play or security play, liquidity, we've talked about a lot of things. Like, where do you, at least right now, as you enter this new year and you're trying to grow, where are you finding that you are spending the majority of your critical time to make it successful? What's like really key for you right now?
I think so. Two things. One is building and maintaining banking relationships. On my side, like we mentioned that already. I think it was part of the question, like that we skipped, that we didn't get to talk to. But banking relationships at the end is what makes or break like this business. If you think about like the best fintech companies, we always operate in areas that are like gray in some way. So you need to have really good banking relationships to explain to the banks and the regulators what you do in a good way, so they can accept your way of working and do that in a compliant way. That would be like one is our key focus to be able to operate. And the second part is it's maintaining, like building an infrastructure that allows us to do that at scale. So that comprises automating the compliance processes, boarding in those regions, especially for that specific use case, is time consuming. You need to be able to do that at scale. Like Bridge, that was one of their biggest hacks. Like they had a massive compliance automation that allowed them to scale very quickly. That was one of the biggest thing they did. I think it worked like perfectly on their use cases. So that's like something we need to automate. There is the operational side, just about like trading activities. We have our own internal team that does market making and then automate. We have everything automated. So every API connected to be able to trade automatically on open exchanges using liquidity providers. Today, when you run like a payment to Brazil from Nilos, everything is automated. The deposits, the reconciliation, the trading on the first exchange, then the movement to the other liquidity provider, then the off-ramp to the local currency. Like all these movements are automated. So that's the second part, like trying to automate as much as possible. And the third part is building processing using AI agents to make that run like a 50 people company. Today we are 11 in the team, but we operate like a 40 people business just because we don't want to raise more funds, and we operate with high clients that ask us to be able to scale very quickly. So we need to have manpower without having manpower, because we won't like spend the money on this. So we run like AI agents on a lot of topics to.
Could you give an example of, I think there's a lot of people asking this question of like, how are they going to use AI agents in their business to do what you're saying? Can you just give one example of something that you've come up with that is using it to make things more efficient?
Yeah. I can give you like one example that we did. I almost completely automated the blog creation on Nilos and the content creation on the blog side. So what I did is that I connected Webflow, Zapier, and Cloud. So Webflow is our website kind of builder. Zapier connects API together, and Cloud creates like the content. So basically today I have like a prompt on Cloud that allows me to generate blog IDs and then act as a SEO expert. Every time I put one of the keywords or one ID that I have, he creates automatically IDs for the post. Then he writes the blog content that is SEO based. He push that directly to Webflow and publish the content or automatically using Zapier. So I have like this automated, officially like probably marketing team 24/7 that can push blog articles. When I have one idea, it takes me like about 2 minutes to do it. And I think it would have taken me like at least like 4 or 5 people to do it on time scale. So that's one idea. I have like 4 or 5 on the tech team probably that we do today. So yeah, that's how we can be more efficient. I'm the only one, for instance, in the marketing sales team.
Yeah, it's incredible. There's a huge trend of like equipping the founder directly and personally to be more effective on the sales, marketing, and revenue side of the business. That is something that our business is focusing a ton on right now, is how can we equip founders to do what you're describing and flow their business. You seem really, just given your background with the newsletter and the curation that we've talked about in the beginning, like very naturally oriented for doing things well. Do you see other founders that are in your orbit thinking this way, or do you think that you're humbly a little ahead of the curve in that?
No, I don't think I'm ahead of the curve. I think everyone is using it. Seeing AI at least a huge like enabler for the way we think about the company. The only problem that I see is that as founders, you don't think that it's critical to take the time off of what you're doing to invest in automating things, because you're always in an operational way. So you're always trying to make sure that you run operationally the company, and so you're putting out fires always. Sometimes taking like one day off to be able to think about how to optimize the process, especially on this AI thing, can help you just smooth things much quicker. And that's like the difference that I see between founders. So I didn't see like a lot of founders taking the time off just to say, everyone is speaking about this AI thing. Let's just for now, shut down. I'm going to rethink about how I build all those processing using those AI. I'm going to take the time to follow my curiosity and build that thing. And then I'm going to optimize for that. I've seen much more founders just saying like, it sounds super cool, but I'm too busy. And I know that everyone is thinking the same, but the biggest shifts that allowed us to, I think, to kind of not be ahead of the curve, but put a double output out of what we can do in the team is because we took that time off. Like that, we invested that time to. I invested that time to understand like what Claude was doing versus ChatGPT, for instance, or like this was during my time off. It wasn't during a moment where I was operationally available.
Yeah. I know we're a little over time, so we can wrap up here. I have to ask, just because I know we haven't personally worked together on these things on the go-to-market side, but when I think about what you've created and what you've built and how effective it is, just with the stablecoin directory, the automated blog post, all these things that you've done, can you just speak to why that's powerful and the results you have then seen from doing those things on the inbound lead side, the growth side? Like, you're not just doing this for fun. There is a result of those things. Like, can you just speak to, there are probably a lot of founders that are listening who are like, yeah, that sounds great, but is it actually worth time investment?
Yeah.
What have you seen as a result from those things?
I'm going to be honest. I went from 80% of leads coming from outbound to 100% coming from inbound. That's the metric.
Mic drop. And why founders doing this? They just don't think that it's worth it. They don't think it's worth the time, or why aren't more people doing this, in your opinion?
I think you need to have a lot of layer, like a lot of priority. You need to prioritize this as something that will make you more effective. You need to invest in losses. Basically, that's what I was trying to refer to before, is that when you spend time to dig into those AI things, you lose time, but you invest. And I don't think that most of the founders, you have a lot of them that are doing like those things. So I haven't spoken to anyone in the space, but the people that are not doing it, I think they are thinking in terms of short-term kind of gain rather than on a longer perspective. So you need to dig deeper into, follow your own like curiosity on this. And you mentioned building things for fun. Like, you're right. I think that's what we like to do. We just explore this on my time off, and that's how you find stuff and you build those things. But why do people don't do that more often? I don't know. Why do people don't build more companies and do like things that they love? It's just, I think it's a lack of curiosity on their side.
Final thoughts as we close for the audience. Who's anything that you want to leave with as speaking to someone who might be considering working with Nilos, or just your general thoughts on the stablecoin landscape going into this year?
I'd really like to speak to anyone that is interested in the space, whether it's founders and people that even just think about like an idea around stablecoin, because every time most of the ideas that we have come from like unexpected chats. So happy to teach further with anyone that's like that. And on Nilos, I mean, it's relatively new for everyone in the space. So we're trying to build like one of the best solutions that exists, and we're here for the longer scale and longer timeline. So yeah, happy to be in touch.
Awesome. Thank you so much for the time. This was really fun. Excited to stay on seeing you guys grow, and also learning from you on the founder-led content playbook.